And welcome to the ABCs of Trade 1348. You've all been requesting a video on the ABC setup, so let's get right to it. But before we do, let's lay some ground rules here. I trade on the 5 minute. I make my decision making based on the 5. My decisions come from the 5, not the 1, not the 3, not the 15. The 5 is the catalyst to my decision making. And I notice a lot of you are trading on the 1. And I want to caution you on that because the 1 has so much noise that it almost doesn't make sense, especially if you have a small portfolio. Now, someone who has a portfolio of 50,000, 100,000, or who's going to enter a trade with size for a 7% return, the 1 minute makes sense. You enter with a lot of money, you scalp quick, and you make meaningful money, right? And because of that, you probably only expose yourself to 1 or 2 trades a day. That's it, right? Now, on the 5 minute, you still limit your exposure to the market because even if you have a small portfolio, there's only so much opportunity to be had on the 5 minute time frame. And I feel that the 5 minute time frame is calmer, okay? And so, unless you're working with a large portfolio, don't even think about the 1 minute. Just really doesn't make sense if you're working with 1,000, 5,000, 10,000 to make, 7% on a $100 or $1,000 entry. It just doesn't make sense. Okay. So let's get to it. Let's talk about setups here. Now, we have to fall back on old school 1348 rules. In rule number 1, if price action is below the 200 EMA, which is this white line, you are biased to puts or to going short. And in this example, we could see that golden eye is our signal to go short or to go puts. Okay. Now, on top of this here, we have what we call an A setup, right? This is an A setup. I almost would call this an A plus setup. Why is that? Well, it meets the conditions. Price action below the 200 EMA, 1348 is in a bear trend, and you are only taking golden eyes that match the trend. That is it. That is an A setup. So, what does a B setup look like? Well, whether you are bullish or bearish, B setups are essentially trades that go against the trend. This here is a B setup. 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 Why? Because you are going against the trend. Furthermore, when you are deciding that a B setup is absolutely the trade you want to take, your expectation is that the B setup will terminate at one of the EMAs. Which EMA? We don't know. We never do know. But you have expectations that it will terminate at the 13 or the 24 or the 48, and that is a B setup. Now, I would advise that those who are playing the B setup are those who have a track record of discipline, because B setups are trading against the trend and possibly setting you up for a great deal of disappointment if you do not know how to exit the trade or discipline yourself to exit the trade as soon as you hit an EMA or as soon as price action rejects from an EMA. Okay, so you want to be cautious in B setups because you're trading against the trend. And when you trade against the trend is down, but you're trading up, you will separate yourself from the trend. Okay. And what that means is if you are not disciplined and securing the bag or taking your profits, you will find yourself red at an accelerated pace because you're going opposite directions. Okay. So B setups are essentially plays that go against the direction of the trend. Okay. This is a B setup if you are a bull in a bear trend, and this is an A setup if you are a bear in a bear trend. Make sense? Okay, let's look at a bull trend and see what the setups look like. Okay. Now, in a bull trend, right, we have price action above the 200 EMA, 1348 also green, which tells us we are in a bullish trend. So therefore, our A setups, we could call this A plus setups, once again, our A plus setups are the trades that go with the trend. And we could see that here. We take a golden eye trade up. We take a golden eye trade up, right? We take a golden eye trade up. You want to trade the trend, okay? Those are A plus setups when you're entering with GoldenEye, right? Now, what are B setups? Well, a lot of you have subjected yourself to a whole lot of pain anticipating the reversal. Well, when you are bullish and you're taking a bearish position, that is a B setup. But just like in the previous example, you could see we have a B setup to an EMA, a B setup that bounced off to 13, B setup that bounced off to 13, B setup that bounces off to 48. Okay. Once again, when you are taking B setups or trading against a trend, your expectation is a rejection off an EMA. Okay. So we have those two pretty much explained, right? Now, what is a C setup? Well, in order to show you what a C setup is, actually, textbook, we have to go ahead and look at NVIDIA. And let's go to yesterday, right? This is a C setup. Let me clear this up for you. Now, why is this a C setup? It's a C setup because we have consolidation. And C is for consolidation. We don't want to take these type of trades, right? Now, if you're following the trend, price action below the 200 EMA, and you have 1348 showing red and trending down, you could literally turn this C setup into an A setup by playing only GoldenEye down, right? You see that there. However, because there is consolidation, because there is what we call EMA braiding, because there isn't enough separation in the EMAs, this doesn't present an ideal environment for me to trade in. So therefore, I'm going to ignore this, right? And if you're really, really unsure on whether, this is consolidating, you could go to other time frames to see if it's consolidating, right? And if we go to the 15, right? What does the 15 look like to you? Absolutely flat. Consolidation. Okay. Now, why do we stay away from consolidation? Really, really simple. We don't know which way the trend will break out to. Okay. And NVIDIA has a way of just destroying ports, especially after consolidating, because those moves are absolutely violent. You just don't know whether it's to the upside or the downside. So when you see consolidation, or you see EMAs braiding, where EMAs are very, very, very close to each other, you stay away from the trade. And that is your ABC setup, summarized and explained in the simplest terms. Hope you learned something.